All right. What is up, tycoons? What's up, traders? Super excited for today's video. Jerome Powell just gave a speech, and there's been tons of market volatility, right? We saw things start to climb when he was, initially starting his speech. But afterwards, what happened is the market has since reversed and things are going down. Now, if you didn't watch yesterday's video that I dropped covering TLT and covering a lot of different things in the market, from inflation rates to sticky inflation to the Fed fund rate, lots of different resources. It's a really good video that's still relevant for you to watch, but I've got another slide presentation for you guys that's going to go over some really good information for you guys to keep in mind as we progress throughout 2023. All right, so make sure to smash the like button, subscribe to the channel if you guys are new, and we're going to go ahead and jump straight into the slide presentation and really get things going, okay? So if we take a look here, what we see starts to happen is TLT has been a leading indicator for the stock market over and over again. And so we have TLT here in blue, and then we have the stock market, the S&P 500 futures here in red. So anytime there's been a divergence where the stock market is going up and TLT is going down, TLT has been a leading indicator, and the stock market shortly follows afterwards, and it follows the direction of TLT. So we saw it happen right here. Same thing happens over here. TLT is making lower highs while the stock market's making higher highs, and the stock market ends up following and goes down. Now over here, the stock market was making lower lows, but TLT was making higher lows. And shortly afterwards, the stock market rallied and followed. So TLT has been a really good leading indicator, right? We can see again over here, S&P 500 futures going up, TLT going down, stock market follows. We're seeing the same thing been happening, guys. And I've been showing this, stock market's been going up, TLT's been going down. This could be another leading indicator if TLT and the stock market are going to keep the same relationship that they've had over the past year, right? We see that anytime there's been a divergence, TLT has been the leading indicator and the stock market's followed. So that could mean we're due for another sharp drop. Now, something really interesting also is going to be the stock market compared to the Wyckoff method. So we have the Wyckoff right here, over here to our right. And this is the SPX weekly chart, meaning, that each candlestick represents a week. And what we're looking at is we're looking at almost an exact mirror of the Wyckoff method, right? So we have our spring over here, just like we have in the Wyckoff. We get our distribution phase afterwards, and then we get the breakdown, right? We get our breakdown, and what do we get? We get a throwback. We get a throwback over here, and we've entered into our correction phase. And look at where we're at, guys. We topped out here on our correction phase, and if this Wyckoff method is going to play out, and there's no guarantees, but it's definitely something you want to keep perspective on, right? It's okay to be bullish, but you also need to know, some of the different possibilities. So, if the stock market comes down and breaks its most recent lows, we really could see a big move to the downside into this redistribution phase. So, definitely be mindful of this. This is a really good chart to have. Maybe save this as a drawing, on whatever your trading platform is, just so you can check in periodically on it. Now, what we're looking at here is the business cycle rotating through asset classes. And you can see that in periods of deflation, right, we're seeing the bond market go up, and we're also seeing the stock market go up. But once inflation starts going up, what you see is you see bonds and stocks starting to go down, and then you see commodities starting to go up. All right, now the next slide is a little bit clearer of that. I'm not sure which chart was going to be clearer for you guys, so I got both of them up. But these are the different phases, okay? We have bonds here in green, we have stocks in blue, and we have commodities in red. So what I want you to highlight is that in phase one, bonds bottom before the stock market, and they bottom before commodities, okay? And then in phase four here, you tend to see, bonds start to top out. Then in phase five, you have stocks start to top out. And over here, phase six is when the commodity market tops out. Okay, so you have to keep in mind that the way that the cycle works is bonds are going to bottom first, and the bond market is going to bottom first. So that's why we've been paying a lot of attention to TLT, and I've been trying to cover a lot of TLT videos, because the bond market is really going to help you understand where we're at in the economy. It's much, much larger than the stock market and can give you some really good insights. Now, keep in mind this chart, guys. All right, what we're going to do is I drew one up of stocks versus bonds and commodities on TradingView. So we have commodities here in blue, we have the stock market here in white, and then we have the bonds market here in red. Okay, so remember phase 5 and phase 6. Okay, phase 6 is when you're starting to see commodities start to top out, right? If we go back to the last chart, that's when commodities are starting to top out, is over here in phase 6. Phase 5 is when you see the stock market top out, right? And so we see that the stock market, remember, is in white. We saw the stock market top out, and we saw commodities end up rising above. Okay, so there's no telling how long we're going to be in this phase 6, but the main thing to remember is that phase 1 is going to result in a bond market bottom before the stock market starts to bottom. So the bond market is down here. We need to keep a close eye on the bond market, especially in relation to this Wyckoff chart that we were looking at earlier, right? If the stock market is about to go through a huge correction, okay, and enter its redistribution phase, there is a chance that bonds may go ahead and make that move first and bottom out before the stock market, according to the different phases of the cycle. So keep in mind, we're definitely in phase 6 right now. We've seen commodities start to top out. All right, we finished our phase 5, and really it's just a question of when is phase 1 going to begin. Maybe perhaps we're already in phase 1, right? I'm not a fortune teller, I'm not a genie. I can't really predict the future or what markets are going to do, but it does seem that we kind of are still in phase 6. Okay, if you take a look here, the stock market really bottomed before the bond market did, right? The bond market bottom was right here, and stocks bottomed just before it right over here. So in my opinion, we really haven't started phase 1 yet, and we're still looking for that phase 1 to begin. Okay, so let's move forward. Now, when it comes to TLT, you can use option chain data to help give you some clues and some context as to where market makers and where people, whether it's retail or institutions, are putting their money and betting on the price of certain assets and securities going. Okay, so we're looking here at some of the shorter term options, right? We have the March 17th, 2023 expiration contracts. And what we can see is the ones with the highest amount of open interest is actually the 95 strike on March 17th for 2023. There's almost 150,000 open interest on that strike price, which is really, really interesting. If you take a look, there is some bullish open interest, but it's at the 107 strike, and it's at 21,000. And then we also have the 110 and 111 strikes with about 23,000 and 34,000. But it seems that there's a lot of people, or maybe some really big players, thinking that TLT is going to have a bearish move, and there's more open interest on the bearish move down than there is on the bullish call options for the short term, right? For March 17th expiration. Now, if we go on into the future a little bit more, we can take a look at May, okay, and we can see that May has 6,000 open interest at our 107 strike price for the call options. Okay, that's a decent amount right there. But look over here, double that in the 100 put option strike for May 19th, 2023. So again, we're seeing more people with larger bets and more open interest on the bearish side of TLT. Now, this data is going to change daily. It's going to change weekly, but it is something that I haven't really included in my videos before that, you guys can let me know if you like it and you want me to start including this some more and just, monitor the open interest for you guys and show it to you. So that way you can really keep track. Now, when you go out pretty far, right, and you go out to next year, the January expiration for 2024, we're starting to see that the market has more bullish bets. Okay, so we're very close to being at the money in the 110 option strike for January of 2024, and that's got the highest open interest of 12,000. So, we took a look and we saw that a lot of the shorter term bets on the market, on TLT specifically, they are more leaning towards the bearish side. But when you go out long term, it seems that there definitely is more bullish bets for the long term. If you take a look over here at the 120 strike, it has over 8,000 open interest on the 120 strike for TLT. Now you compare that to the bearish side, and we have about 7,000 is going to be the highest open interest currently, and that's right here, right at that 90 strike price. So we're seeing a lot of high open interest between 90, 95, 100 when it comes to TLT on the put side, but we are seeing some bullish data for the long term when it comes to the call side for the option chain data. So, there may be more pain ahead in the short term, but as of now, people are placing their money that in a year from now and next year, the bond market in TLT is going to be, performing a little bit better, and they're more bullish long term. And maybe a lot of these are hedges against some of their bullish positions. You don't really know. You can't really tell what people's bets are if the high open interest on the put side is simply because they're shorting it, or simply because they have a massive long position, whether it's shares or call options, and they're just looking to hedge themselves for some short-term volatility. So that's it for our slide presentation. What we're going to do is actually hop on over to the TLT chart now on TradingView. And there's a couple indicators that I went over in the last video that were giving us some signals that we could potentially be seeing some bearish activity, right? So we had the double top forming over here, all right, really rejecting our 61.8% retracement level at 109.72. Now, why is the 61.8% retracement level so important? Well, for the past year, what we've done is we've retraced and rejected our three major retracement levels time and time again. You see, we move down, we retrace, continue that trend, 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 and we've retraced, but we did get a strong bounce here, and it looked like we possibly could have been breaking out, but instead we formed a nice little double top here. Okay, so we're going to zoom back in on the present data and look at our current pattern. Now we are tracking a larger 5-wave pattern to the downside on TLT. That's going to take us anywhere between 80 and 90. Okay. Now, we've recently put a little bit of a hiccup in our structure. It's been following the structure pretty well for the past year, where your wave 1, okay, and your wave 3 and your wave 5, those are supposed to be 5-wave impulsive moves to the downside. So we got our 3, 4, 5 down here, and your wave 2 and your wave 4 are ABC corrections. So we got an ABC correction rejected at the major retracement levels, and then we get the 5-wave impulsive move to the downside. Most recently, we got an ABC correction here, and we were looking to start our 5-wave move to the downside, and we were really following the structure very well, coming down, completing our wave 1, bouncing off of this long-term trend line that we were previously rejecting. We broke out, retested it, and we got a nice wave 2 bounce, but we've really been consolidating and ended up forming a bull flag here. So it was a little confusing. What is our structure going to do? Are we going to break our 5-wave structure to the downside, or are we going to continue it? And we've really just been chopping, moving sideways, throwing a lot of people in a loop. Some of the indicators that we use to help us identify confirmation on our structure is going to be the MACD as well as the RSI. Okay, so the MACD, we've been looking for sell signals and entry signals to really help give us a confirmation. If you look over here, we got a MACD sell signal shortly after rejecting our major retracement levels, and we came down and started our 5-wave structure to the downside. Over here recently as well, we were looking to see if we're topping out and getting confirmation of a sell side to begin our 5-wave structure to the downside, and we did get that sell side, that sell signal, and really start to move down and bounce right around here where our wave 1 should have ended. Okay, now you also use it for entries, and we can see we did get a nice entry signal on the MACD where the blue line crossed above, and that really gave us confirmation that we were starting our wave 2 up, and we were able to capture some nice trades and nice profits along the way. Okay, now when it comes to the relative strength index down here, our RSI, we had a couple things giving us a little bit of a context that we could see some bearish activity. Again, not only did we have that double top forming here, which could turn into an M pattern, right, and look something like this and take us back down to the 95 to 90 range, right? But we were also noticing how we've really moved sideways and actually slightly higher, right? We made a high, higher high, higher high on TLT, but when it came to the RSI, we were also trading in this bearish channel right here. So we had a slight bearish divergence going on in TLT when it comes to the relative strength index. And we also had a bearish divergence here after our double top, okay, where we're making a high and we're making lower highs on the relative strength index, while we're really just, basing out and making some equal highs over here. So there were a few indicators, which is why I highlighted the last video. This whole rally has kind of really been a trap, and it may catch a lot of people by surprise. And we were questioning, what the MACD was going to do. Was it going to start consolidating here and really just chopping and moving up and down, up and down? But the MACD has started to curl downwards even more. And if that continues, and if we continue to see some higher ticks on our histogram here, or I guess lower ticks, red ticks on our histogram here, that really could indicate that this was a big fake out period of consolidation, and most likely we're going to start that wave 3 down. We have 2 gaps to fill on our daily chart on TLT. Those gaps are going to be down to 95.2 roughly, as well as 100.53 roughly. All right, but there's still 2 gaps up above, right? So, we really haven't broken the bull flag structure here. There is still a chance for bulls to come back in. All right, but right now, bulls are losing a lot of the control. We're below our 106.33. We haven't been able to stay below there for very long, right? Each time we've gone below there, we've gone back up, and we've really just been going up and down above our 106.33 level, and not really giving any clear indication of direction. Hopefully our relative strength index and also our MACD here can provide some clarity and show us that we are starting our move downwards. If we are going to get that move downwards, 102.94 is going to be a really important support level to break. If we do break that, most likely we're going to fill the first gap and potentially come back and fill the second gap, as well as retest this trend line here that we've tested previously here in the past. If we break that trend line, then this is going to be a much larger look above, okay, and then fail, which ultimately could take us back down to our target that we're speaking of here between 80 and 90 on TLT. The reason being is a look above and fail is really a bearish setup right here. If buyers and bulls aren't able to come in here and take control after this breakout, it's going to show that bears are actually coming back into control, and is most likely going to push us to the lower range of our targets here if we end up breaking that trend line on a retest. But there's still lots of work to be done. We still do have the bull flag structure here, so there is a possibility for bulls to come back in and really push things up. Remember, we have 2 gaps up to fill, as well as the 2 gaps down. All right, first gap up is to 108.17, and then the second gap up is around 111, I believe. 111.50, let's call it, right in between there. So hopefully you enjoyed today's video. If you did, please smash the like button. Please subscribe to the channel. Really helps the small channel out, and I'm out.